afternoon, Matrix. Welcome to Mindset Learn, the home of the brain. You tune in this hour with myself, Dabucho Precious, and Mahesh, and our favorite accounting buffin, Monedi. How are you guys doing?
I'm well, Tabeko. How are you today?
I'm well, thanks. Now, as you all should know, tomorrow is Women's Month. And I've been asking this question the whole day. And to our mindsetters, please keep posting. Who is your favorite woman and why?
Okay, is that for me?
Yes.
Okay. I think I'm going to have to say my mum.
Okay.
And my grandmom as well. But if I had to choose someone outside the family, then I would go with Mother Teresa.
Mother Teresa. Oh, wow. She was quite inspirational.
Yeah, she was.
And Monedi, who's your favorite woman?
I'd have to say my mom.
Your mom.
Yeah.
Your mama's boy.
Yeah, I am. Just because she inspires me to be better.
Ah, that's great. That's
lovely.
awesome. Now, guys, I'd really love to read what you have to say. I know a lot of people say it's their moms, and I really understand. My mom is my favorite woman as well. Please don't forget to post all your questions, your queries, and your comments about today's show on facebook.com/learnextra or mindsetlearn/live. With that said, you may continue with the show.
Okay. Right, mindsetters, today we're going to be focusing on financial statements, and I've picked a question where we've got a bit of asset disposal as well. So without wasting any time, let's go straight to the question. Remember, guys, we're obviously doing a lot of revision at this point, and if there are any questions on any of the adjustments or calculations, please let us know. So let's get started. Right, financial statements, a question where we're going to be completing the income statement, and there will be a bit of asset disposal. Right, let's go straight to the question itself. Okay, just want to let you guys know that this was taken from November 2009, the year-end exam. Okay, right, our question, you are provided with the pre-adjustment trial balance of Simpiwe Limited. The company buys and sells uniforms, and they also repair uniforms. By repair, guys, obviously we're talking about altering uniforms for their customers, for which they charge a fee. Okay, so immediately we're obviously looking at a trading business that also provides a service. So in other words, their main source of income will obviously be sales. But apart from sales, because they render a service, we obviously also have fee income. Okay, these fees are credited to the fee income account in the general ledger. Right, guys, for this question, we are required to, firstly, 1.1, refer to information 2J below, calculate the profit or loss on disposal of the computer, show workings. You may prepare an asset disposal account to identify the figure. For 8 marks, so there's our asset disposal. And thereafter, they want us to also, let's go to the second part of the question. We're going to complete the income statement for the year ended 30th September 2009. Okay, guys, so a bit of asset disposal and obviously the income statement. Now, remember, guys, the moment you get an income statement, there's a very, very important GAAP principle that comes into play. Monedi, I don't want to put you in the spotlight, but I know you're going to get this correct. Which GAAP principle am I talking about?
Matching.
Good. It's a matching principle. In other words, when I'm doing an income statement, the financial year that I'm working for ends on the 30th of September 2009, which means it started on the 1st of October 2008, and the matching principle simply tells me that all income and all expenses for this time frame needs to be shown in that income statement. Okay, right, let's now go to the information and let's get started. Very quickly, guys, the information that they've given us the pre-adjustment trial balance, which I'm not going to go through in detail. So there's that pre-adjustment trial balance, and then obviously in the pre-adjustment trial balance, the nominal account section is my starting point for this income statement that I need to complete. Okay. Right, we're now going to go to our very first part of the question, and we're going to look at the asset disposal itself. So let's now go to, let's quickly find the question first. Okay, let's just go back to the question. Okay. Okay, let's just find it there quickly.
Mindset is, don't forget to download your notes to today's show. I'm quickly going to post them, and make sure you download them so that you're on track with us. It's so nice when you guys are working with the teacher while she's busy giving the lesson. It's very productive. On that note, Mahesh, are you ready?
Yeah, I am.
Great.
Okay. Right, guys, the very first part of the question wants us to calculate the profit or loss on disposal of the computer, and they're asking us to refer to information 2J. Now, before we actually look at information 2J, if I'm calculating profit or loss on sale of an asset, there are three very, very important figures that I need. These figures are the cost price of the asset that I'm disposing. What did we purchase this asset at? What was the cost price? We then also need the accumulated depreciation. And remember, when I say accumulated depreciation, in brackets I'm going to write down, we always want the updated accumulated depreciation. So that's the second figure that we need. And the third figure is my selling price. Okay, now without these three figures, I cannot calculate whether I've made a profit or a loss on sale of asset. So when I'm going to go through the information, which is 2J, remember, these are the figures that we're obviously looking for. So let's now go to the information itself. Okay, so we're looking for information J. Okay, let's quickly find that. It should be towards the end of this. There we go. Right, information J reads as follows. Depreciation on equipment is calculated at 10% per annum on the cost price. Note that an item of equipment was taken over by one of the directors on the 30th of June 2009. In other words, it was taken over during the financial year for personal use for 800 Rand cash. Okay, so immediately that 800 Rand cash represents the selling price, what the asset was sold at. The relevant page from the fixed asset register is provided below. No entries have been made in respect of the disposal of this asset. Now remember, guys, the question wants us to calculate whether we've made a profit or loss on the sale of this piece of equipment. So I'm given my fixed asset register, and in this register itself, something that immediately gets my attention is the cost price. So this piece of equipment, or this equipment rather, was purchased at a cost price of 22,000 Rand. Okay, further down, I am given the depreciation for the various years that the business owned this asset. And if I go to accumulated depreciation, at the end of the previous financial year, which is the 30th of September 2008, my accumulated depreciation on this asset was 5,500. Okay, so immediately, if I look at the information that I'm now going to take through to my calculation, I need the cost price, which I have. I need the selling price, which is given to me, 800 Rand. And then I also need accumulated depreciation. However, I need an updated accumulated depreciation, which is not given to me. So let's take these figures through, and let's now work out what the profit or loss on the sale of asset was for this particular computer that was sold, and obviously, yeah, taking this information through. So let's go to the question itself. So my cost price, okay, Monedi, do you want to give me what the cost price of the asset was?
22,000.
22,000, so let's just write that in. Okay, accumulated depreciation. Now, I know it's not updated as yet, but what was the accumulated depreciation at the end of the previous financial year?
7,150.
7,150. Let's just quickly check that. Okay, it's actually 5,500. Okay, right, the 5,500 was my accumulated depreciation before I am updating this figure. So let's just write that down, 5,500. But I'm just going to make a little note. It's not updated as yet. And then finally, the selling price of the asset. Monedi, you can help me on this one.
It's 800 Rand.
It's 800 Rand, correct. Right, so let's now look at what we're going to do with these figures. The first thing that we need to do is we've got to update our accumulated depreciation. Now, what do I mean by updating accumulated depreciation? I'm going to have to calculate what is the additional depreciation that we need to provide for this asset. Okay, now I'm going to quickly draw my timeline. Okay, financial year started on the 1st of October 2008 and it ends on the 30th of September 2009. And if we look at the disposal of this asset, it took place, I think it was June, but let's just go back to the info quickly. Okay, let's look at when the disposal took place. It took place on the 30th of June. Okay, so let's fill that in. So somewhere here on the 30th of June. Okay, now at the moment, my accumulated depreciation is 5,500. In other words, at the beginning of the year, it's 5,500. I now need to update accumulated depreciation for the time frame where the asset was used during the financial year. In other words, from the 1st of October until the end of June. So in order for me now to provide the depreciation, remember it's on the cost price method. So I'm taking the cost price of this asset, which is 22,000. So let's fill that in. Okay, 22,000 times the rate which was given to me. I think I've read that already. Monedi, just check. Is it 10%?
Yes, ma'am.
Okay, so 10%. And then, because the asset was sold during the year, I cannot depreciate this for an entire year, but obviously for just the portion of the year itself. So from the 1st of October until the end of June, I think it's 9 months.
It is 9 months.
It is 9 months. 1st October to the end of June is 9 months, so times 9 over 12. And the additional depreciation that I now need to write off on this asset, let's get our calculator out. Okay, so we're taking, let's just move this. Okay, that's fine. So we're taking our 22,000.
Do you want me to give you the figure?
It's fine. You can double check for me. Times 10% times 9 divided by 12. And is the additional depreciation 1,650? Yes. Okay, so 1,650. Let's just fill that in. 1,650 is the additional depreciation that we have to write off on this asset, which means my accumulated depreciation for this asset, if I now add on 1,650 to the 5,500, at the date of sale, this asset had an accumulated depreciation amount of, let's just add the 5,500, okay, 7,150. So at the date of sale, my total accumulated depreciation, 7,150. Okay. Right, guys, once I have my accumulated depreciation, all I now need to do is draw up my asset disposal account and work out whether I've made a profit or loss on sale of asset, which is not going to take us too long to do. So let's now draft, okay, asset disposal. Okay, Monedi, one more time, the cost price of this asset
Was 22,000.
22,000. Okay, my accumulated depreciation on this asset, the figure that we just worked out.
7,150.
Okay, so 7,150, and the asset was sold at a selling price of
800.
800. Okay, so let's get our calculators out and let's work out whether we've made a profit or a loss on sale of asset. I'm just going to move this so that I don't block our T account. Okay, so cost price 22,000. Okay, minus my accumulated depreciation 7,150 to give me a book value, guys, 14,850. So this asset was worth 14,850. We sold it for 800 Rand. Monedi, did we make a profit or a loss?
I think we made a loss.
We made a loss,
Yeah.
isn't it? We made a huge loss.
Yeah.
Something that's worth 14,850 was only sold for 800 Rand. So we made a loss of, let's subtract the 800 Rand. We made a loss of 14,050. Okay, right, so let's fill that in. Loss on sale, let's get the pen back. 14,050 is the loss that we've made on this asset. Okay, are there any questions? Monedi, are you fine?
100%.
Okay.
No, not yet.
Nothing as yet. Right, guys, once we've calculated this loss on sale of asset, let's now look at the income statement, and let's look at, because we are obviously doing the income statement, let's look at where we would put in this 14,050. So let's go to the income statement, which should be on the next slide. Okay. There we go. There's our income statement. I think you guys would have already noticed what I've done is I've brought down my totals from the pre-adjustment trial balance so we can focus on the adjustments. So if I scroll down to my income statement, under operating expenses, I have a loss on sale of asset. Okay, which obviously is an operating expense, guys, 14,050. Okay, not difficult, guys, not difficult at all. Okay, do you think we should take a quick break?
Yes, I think it's time for a quick break. Guys, just think about what has just been taught. We'll see you in a few minutes. Welcome back, Mindsetters. Now I'm quickly going to read a very important announcement. Are you guys interested in doing grade 10 to 12 CAPS content development, review, or video presentation? If so, visit mindset.co.za/learn/jobs to learn more about the opportunities available from Mindset. Now, Mahesh, I have a quick question from one of our Mindsetters,
Okay.
and it comes from Duncan Pasha. And he's asking, I'm having problem calculating rent income. Please help, especially when it is paid in advance.
Okay. Duncan, please don't worry. We are going to come to that adjustment. There is one adjustment on rent, and hopefully we will come to that after going through the first three. I think it's a fourth adjustment.
Okay.
Okay.
Yeah,
Right,
thank
can we
you.
carry on?
Yes, sure.
Okay, brilliant. Right, guys, we're ready now to complete that income statement. So let's start with the very first adjustment. Adjustment A, prepaid expenses in respect of sundry expense at the end of, sorry, let's do that one more time. Prepaid expenses in respect of sundry expenses at the year end, 3,200 Rand, have not been taken into account. Okay, guys, this one's quite straightforward. Prepaid expense is obviously an expense that has been paid for the next financial year. In other words, after the 30th of September 2009. So remember, income statement, we obviously need to look at the matching principle, and we need to show income and expenses for this time frame only. So something that has been paid for the next financial year must not be shown in my income statement. So all I'm going to do is go to sundry expenses, and I'm going to remove, in other words, I'm going to subtract 3,200. So let's do that. Let's go to that income statement, and we're looking for sundry expense or sundry expenses minus 3,200. Okay, that was the first adjustment. Let's now look at the next adjustment. Okay, adjustment B. On the 30th of September, which is obviously during our financial year, or end of our financial year, 580 Rand was received from A Ethics, whose account had previously been written off. So in other words, he was a debtor and his account was written off as a bad debt or as irrecoverable. The amount was entered in the debtors controlled column in the cash journal. Okay, so immediately we notice that there is an error. Instead of entering this account or this amount as bad debts recovered, which is the income, by mistake the accountant has entered this into debtors control. Okay, so what I want to do, guys, is quickly draw two T accounts to explain exactly what has happened. Okay, so we have our income, bad debts recovered. Okay, and instead of entering the 580 Rand in bad debts recovered, we've entered it by mistake in debtors control. Okay, now remember, guys, debtors control, if we've entered this amount, we've obviously entered the 580 on the credit side in error. And in order for us to correct this, we now need to debit debtors control with the 580. In other words, try and cancel that error that we've made, and we now correctly credit bad debts recovered with 580. Okay, not a difficult adjustment, quite straightforward as long as you understand where the error occurred. So
ma'am, we
Monedi?
don't touch bad debts at all.
No, we don't.
Okay.
Okay, remember, Monedi, bad debts is the expense.
Yeah.
Okay, this is where the guy has now come to the shop and he's feeling really bad. He hasn't paid his account and he's now paying us 580. So we've already written him as a bad debt, but now we've recovered this 580. Okay,
Thanks,
so bad debts recovered, Monedi, income or expense?
I think it's an income, yeah.
It is an income, correct. So in our income statement, let's go to that income statement. There we go. It is an income, so under operating income, bad debts recovered. Okay, and that amount, Monedi, it was 580. 580. Okay. Right, guys, let's now move on to our next adjustment. Okay, so we're done with adjustment B. Remember, we're only focusing on the income statement. In other words, just income and expenses. Right, adjustment C. The provision for bad debts must be adjusted to 1,830. In other words, they don't want us to do an actual calculation. They're now giving us the new provision to be 1,830. So in brackets, I'm just going to remind myself that this is obviously the new provision that we now need to show in terms of provision for bad debts. Let's now go to our information. Sorry, not our information. Let's go to our trial balance. Let's just quickly find that. Okay, so I need to just, Monedi, while I'm looking for the info on the balance sheet account section of the trial balance, okay, very quickly, if you can check for me, provision for bad debts, the old provision in the trial balance is an amount of 1,440. 1,440,
yeah.
Correct. Okay, so that's our old provision. I'm just going to take this through now to the adjustment itself. Okay, so 1,440. We were busy with adjustment C. Okay, 1,440 was the old provision. We are now given our new provision, 1,830. So immediately we notice that our provision is going to be increasing. Okay, we're expecting more bad debts in the future, hence we are now making a provision for that increase in bad debts. And let's look at firstly how much is this provision increasing by. So let's get that calculator out. Okay, just going to move that. Right, so we've got our new provision 1,830 minus 1,440. to give us an increase in provision for bad debts of 390. So let's just fill that in, 390. And because it is an increase, okay, we are expecting more bad debts. Monedi, do you think this is going to be an income or expense for the business?
Expense.
It's an expense, okay, because more bad debts obviously means a loss, so it's going to be an expense. So let's go to that income statement, guys. Let's get rid of that calculator. It is an expense, so under operating expenses, provision for bad debts adjustment. Okay, and please guys remember, do not leave out the word adjustment, because if you leave out the word adjustment, it's no longer an expense. Provision for bad debts is considered to be a liability or a negative asset. It is not an expense. So provision for bad debts adjustment, and that adjustment amount was 390. Okay. Right, any questions, guys?
No,
Are
ma'am.
you fine?
Mm-hmm.
Okay, Monedi,
Yes,
are you
ma'am.
fine? Right, guys, let's move on now to our next adjustment. Let's get that back. Okay, so we're done with adjustment C. I want to quickly go to the rent adjustment first. We'll come back to adjustment D. Okay, adjustment E. Rent has been received for 14 months. Okay. Right, back to the matching principle, guys. Remember, we are working for a 12-month period. Okay, the adjustment now tells us that rent has been received in advance. In other words, it has been received for, okay, we've got end of September, so it has been received for the month of November as well as the month of December. Okay, so immediately, matching principle tells me anything outside this timeline now needs to be removed from my income statement. So all I'm going to do, quite straightforward, I'm going to take my total rent received for the financial year, divide by 14, and then remove 2 months of rent. So let's do that. Let's go to our trial balance, okay, or we can go to our income statement itself. Rent income, the total rent received, 56,000, and remember it is for 14 months. So let's get that calculator out. Okay, so I've got 56,000. Divide this by 14. So my monthly rent that I receive is 4,000. I've received 2 months in advance, so times 2. Okay, 8,000 belongs to the next financial year, and therefore it needs to be removed. So I'm now going to subtract 8,000. Okay, Duncan, I hope that answers your question.
Mm-hmm.
Okay, all right, let's move on to our next adjustment, guys. So back to our info. Okay, the next adjustment. The following credit note. So immediately, credit note means there's a return. The following credit note was left out of the debtor's allowance journal for September in error. The markup on goods sold was 50% on cost. And there's our actual credit note. So let's go through this. We are given 24 uniforms were returned, the unit price of 1 uniform, and the total, which we are obviously interested in, is 9,600. Then we've also got a reduction on fee charged for the repair of uniforms, 750. Okay. Right, guys, at the beginning of the lesson, remember when we were reading through the info, when we were reading through the name of the business, we came across the fact that this business sells uniforms as well as provides a service to their customers where they alter uniforms, obviously as an additional service. So in order, or when they sell uniforms, obviously we're looking at sales, and when they charge their customers for altering the uniforms, we are looking at fee income. So 2 completely different types of income. Let's firstly look at the uniforms that were returned. In other words, the 9,600. Now remember, guys, if if a customer is not happy with an item and they obviously come to your shop to return the item, immediately that sale now needs to be cancelled. In other words, it's going to become an expense called debtor's allowance. And what does debtor's allowance do to sales? Absolutely correct. It reduces your sales. Monedi, am I correct?
Correct.
Okay, debtor's allowance will reduce sales. So that was our total sales. We're now going to reduce our sale amount by 9,600. So let's go to that income statement. Okay, sales minus 9,600. Okay, now immediately, guys, if I'm going to reduce sales, automatically I'm going to have to also reduce my cost of sales. In other words, I'm now cancelling 9,600. The sale obviously hasn't taken place because the customer returned the items. I haven't incurred a cost in terms of the sale itself, so I now need to reduce my cost of sales as well. Now, if we go back to the information, at the beginning, or in the adjustment itself, we are told that the markup on goods sold was 50% on cost. So given that information, quite straight for us to calculate the cost of sales. Okay, so let's get our calculator out. 9,600 times 100 divided by 150, and the cost price on these items, 6,400. So let's now subtract minus 6,400. Okay, now the common mistakes that grade 12s generally make when it comes to this adjustment is instead of subtracting 6,400 Rand from cost of sales, they add 6,400. Okay, please remember this, guys. If you're going to cancel a sale, you must also cancel the cost of sale. Okay, not done with that adjustment. Let's go back to the second part, to the adjustment itself. The second part being the reduction on fee charged, 750. So again, all we're doing is in our income statement, okay, fee income, we're now going to reduce our fee income by the 750. Okay. Right. Do you think we should take another break?
I think it's time for a quick break now.
Okay, brilliant.
Now, I see you guys are having a lot of fun. I'm having a good time. Komuto here is having a great time. Monedi is having a good time. I think it's time to take a quick break so we can come back to this awesome accounting lesson. Welcome back, Mindsetters. I trust that you're having a great time with this awesome accounting lesson. Now I'm quickly going to read a question from one of you guys, and it comes from Standerful, and he's asking, please help me out with the calculations of interest expense when it's capitalized and not capitalized as well.
Okay, I think what we're going to do, because this is the last segment of the show, let's go to that question. Let's go to that adjustment. Okay. I've got an adjustment on that. Okay, so let me find the adjustment. Okay, there we go. Right, I'm going to look at when interest is capitalized, because that's what this adjustment deals with. We are given the loan statement from Stay Bank reflected the following. So obviously this business has a loan. So I'm just going to quickly draw up a T account for loan. Okay, loan, obviously a liability. All right, let's now read the statement. Balance at the beginning of the financial year, 150,000. Okay, so I'm going to take that info and put it into this T account. So at the beginning of the year, my loan was sitting at 150,000. Next bit of info, repayments during the year, 78,000. So if I'm going to repay my loan, obviously my loan is going to reduce. The balance is going to go down. So on the debit side, I'm going to fill in my repayments of 78,000. All right, so done with balance, done with repayments. The third part of this table, interest capitalized, and they are not giving us the interest amount. Now, when we look at interest capitalized, what does this simply mean? Monedi, do you want to try? You can try.
I think
interest capitalized simply means interest is being
Added
to the loan
yeah.
itself. Okay, good. So interest would have been added on to my loan. And at the moment, I have no idea what the interest amount is. The next bit of information, balance at the end of the financial year, my loan is sitting at 90,000. Okay, so let's take that information through. Balance carried down represents end of the year, 90,000. Okay, now once I have all of this info on a T account, it becomes really, really simple to calculate this unknown figure, which is the interest. What is the interest? Monedi, do you want to try and help me here in terms of how I'm going to calculate? Firstly, which side am I going to total first? The debit or the credit?
The debit.
The debit side. Why the debit side? Because I've got known values on the debit side. So if I add the debit side, okay, 78,000 plus 90,000, and I'm just going to get my calculator, guys. 78,000, okay, plus 90,000. On the debit side, I get a total of 168,000. Okay, I can now take this total to the credit side, 168,000. In order for me to now get my unknown value, Monedi?
You're going to subtract the 150,000 from the 168.
Okay, correct. I'm going to say that one more time, guys. I'm going to take my 168,000 minus 150,000 to give me an amount of 18,000, which is my interest expense for the financial year. In other words, in my income statement, remember my interest is an expense. So in my income statement, let's go to that income statement. Towards the bottom of the statement itself, interest expense. This is where I'm going to show my, am I writing it in the right place? Yes, I am. 18,000. Okay, now remember, guys, the T account, yes, it is not compulsory for you to draw up the T account, but it gives you an indication of what you're adding and what you're subtracting. Once you've done that T account, it takes less than a minute for you to show your calculations in brackets. In other words, what I added on the debit side minus what I had on the credit side to give me that 18,000. Okay, I hope I've answered his question in terms of interest capitalized. Okay, right, let's move on. Let's see how many more adjustments we can work through. Okay, the next adjustment, adjustment I, depreciation on vehicles is calculated at 20% per annum on the diminishing balance method, and there's no other info telling me that we purchased additional vehicles during the financial year. So a very, very straightforward calculation. Okay, depreciation 20%, diminishing balance method. So all I'm doing is in my income, sorry, not income statement, but rather the pre-adjustment trial balance. Let's find that quickly. Okay. All right, need to go all the way back to that info at the beginning.
Monedi, accounting. Why did you choose accounting? Why not physics, maybe, or
my parents wanted me to do accounting.
Oh, your parents wanted you to do, so they become boffins as well?
Not really. So I think that's why they wanted to just fulfill their own.
Oh, okay.
Lack, I guess.
And are you enjoying the subject?
I do, especially with a great teacher.
Yeah, I can imagine. If only she was my teacher in my high school as well. But I loved my teacher as well. I love mindset.
Okay, right, guys. We're obviously looking at vehicles, the depreciation calculation. So we need our vehicles at cost, the amount. Okay, so let's find that quickly. Vehicles at cost. Can't really see that amount. Monedi, I'm going to ask you to just double check. Is it 220,000?
220,000.
Okay, so I'm taking 220,000 and I am subtracting the accumulated depreciation on vehicles thus far, and I think it is 41,000.
That's right.
It is. So minus 41,000. Okay, to give me a book value of 179,000. So I'm going to multiply this by 20%, and the depreciation that we're writing off on vehicles, 35,800. Okay, so let's take that through to our income statement. Okay, so depreciation, let's fill that in. Okay, my depreciation amount, open brackets, because I still need to include depreciation on equipment. So on vehicles, it's sitting at, okay, let's get the pen back, 35,800. Okay, quite a straightforward adjustment, guys. Remember, diminishing balance method, you have to take cost minus accumulated depreciation. Okay, right, let's now move on to the next adjustment. Okay, we're going to have to go all the way back to the last adjustment. Okay, almost there. So we've done with I. Okay, back to J. Right, adjustment J was obviously the profit and loss on sale of asset, but there's something that we've forgotten to do on the income statement as well. Yes, we have shown, let's put this back, yes, we have shown the loss on sale of asset, but we haven't shown the depreciation on equipment itself. Now remember, in our calculation, we obviously calculated the depreciation on the asset that was being disposed, and I'm talking about the additional depreciation. So let's go back to the very first question, guys. Okay, right, there we go. The depreciation, the additional depreciation that we had to write off, an amount of 1,650 Rand. This amount needs to go to that income statement. So let's do that. Let's fill this amount in. So in our income statement, okay, it should be on the next slide. Okay, under depreciation, this was for the asset disposal, the additional depreciation that we had to write off, 1,650. Okay, right, let's now look at the rest of the adjustment. Okay, the rest of the adjustment obviously deals with depreciation, still needs to be provided. And guys, this is not on the slide, but this is something that you should already know. Depreciation still needs to be provided on remaining equipment. In other words, the business obviously has, it's not just that computer, but they've got other equipment, and we still need to depreciate the remaining equipment. So let's do that. Let's look at the calculation of depreciation on remaining equipment. Okay, so my remaining equipment, the calculation would be as follows. Let's just extend that page. We're going to, okay, the pre-adjustment trial balance. Guys, it's going to take me a while to get back to that pre-adjustment trial balance. Monedi, I'm going to ask you to help me. Okay. In that pre-adjustment trial balance, what is the cost of equipment?
It's 190,000.
190,000. Okay, and remember, guys, I've obviously disposed equipment with a cost price of 22,000. So I'm first going to subtract the 22,000, and then I'm going to provide my depreciation at a rate of
10%.
10% for the entire year. Okay. So let's get our calculator out. So my depreciation on remaining equipment would be the 190. Subtract the 22, the asset that was sold. Okay, times 10%, 16,800. Okay, so let's fill that in. 16,800. Additional depreciation that needs to be now shown in that income statement. And let's go to that income statement. Depreciation, there we go. So we are adding plus, get that, plus 16,800. Okay, now guys, please remember, when you are showing your depreciation calculations, try and show each amount separately. In other words, a lot of students show us one amount, Okay, and they often, or sometimes it may happen, they get this total incorrect and we are unable to give them part marks. So please make sure that in brackets you are showing us the calculations, the amounts separately. Okay, right, let's see if we can do the very last adjustment. Okay, so back to my info. Right, guys, the last adjustment, adjustment K, income tax for the year amounts to 63,280. Okay, absolutely no calculations. All I've got to do, guys, is take this amount into and slot it into my income statement. So the very last, or rather the second last line in the income statement, this is my tax expense for the financial year, no calculations. So let's go to that income statement. Let's find it.
So,
Okay. Yeah, there we go. Right, so my income tax amount, Monedi,
your income tax is 63,280.
280. Okay, absolutely no calculations because they're giving me the expense amount. All I'm doing is slotting it into my income statement. Again, guys, what students often tend to do is they forget to put the brackets. Now remember, income tax is an expense and you've got to show this in brackets. If you're going to leave out the brackets, unfortunately, we consider this to be a positive amount and we're not going to give you the marks that you deserve. Okay. Are there any questions?
Yes, I have a quick question from Siyabonga Kangisani, and he's asking what kind of income do we call fee income?
Fee income, what type of income?
Yeah, he probably means that.
Fee income is an income for services rendered. Okay, not quite sure what he means by what type of income. It obviously, in terms of the type of income, you get certain incomes that comes from the sale of a product, so that would be sales, for rendering a service, fee income. Some textbooks call it current income, so that could be exactly what he's asking.
And then I have one more from Serpi, and her question is, I don't understand how you calculated the depreciation on equipment. I'm lost.
The depreciation on equipment. Okay, right. What I'm going to do, because we're running out of time, I'm not going to go back to the actual adjustment, but very, very quickly, your depreciation on equipment. Okay, just to summarize, guys, we obviously had a disposal where an asset was sold and we had remaining equipment for the financial year itself. So for the disposal, we had to update our depreciation or our accumulated depreciation for 9 months, and all we did was we took the cost price, 22,000, we multiplied this by 10% times 9/12, okay, in order for us to get our very first total for the disposal in terms of depreciation on equipment. And then for the remaining assets, in your pre-adjustment trial balance, your equipment had a balance of 190,000. Monedi, just check that for me. Was it 190?
Yeah, it was.
I'm getting this from the pre-adjustment trial balance. I'm going to then subtract 22,000. In other words, the asset that we dispose, that we no longer own, and then multiply by 10% in order for me to get my depreciation.
Okay.
Okay, I hope that answers her question.
Yeah, I hope so too.
Okay.
I think it does.
Right, are there any
No,
other
that's
quick
all.
questions? Okay. I don't think there's enough time for me to get to the adjustment on directors. Should I try to quickly explain it?
Yeah, maybe like just
Maybe I should.
half an hour.
Okay. Right,
I mean,
let's quickly
30
find that
minutes, half a
adjustment, and
minute.
that's what takes a bit of time, is finding the adjustment
second.
itself. Okay, to the info, I think it was adjustment D that I left out. Okay. Right, very quickly, guys, there were 2 directors at the start of the accounting period. Directors' fees have been paid for the first half of the accounting period. On the 1st of April 2009, a third director was appointed. All three directors earn the same monthly fee, provide for the outstanding fees owed to the directors. Okay, guys, if I don't have time to do the actual adjustment, just pay attention very quickly to how you would deal with this adjustment. You've obviously got three directors, each earn the same fee. And if you go to that pre-adjustment trial balance, I think the first two directors for the first half of the financial year, they earned 390,000. So automatically, guys, they would then earn for the second half of the year another 390,000. And the third director, because he was appointed halfway during the financial year, he's going to earn half of this fee. Okay, I hope that helps.
Yeah, thank you so much for the great lesson. One of our mindsetters says she enjoyed the lesson. Utsile, if only could last longer.
Oh,
Mondi, I'm pretty sure you enjoyed the lesson as well. Is there anything you'd like to say to our mindsetters? Goodbye, shout out to maybe before we leave.
Just good luck for prelims to my school and good luck for finals.
Yeah. Well, guys, on that note, until next time, stay blessed. Goodbye.
Adjustment trial balance, the nominal account section is my starting point for this income statement that I need to complete. Okay, right, we're now going to go to our very first part of the question, and we're going to look at the asset disposal itself. So let's now go to, let's quickly find the question first. Okay, let's just go back to the question. Okay. Just find it there quickly.
Mindsetters, don't forget to download your notes to today's show. I'm quickly going to post them, and make sure you download them so that you're on track with us. It's so nice when you guys are working with the teacher while she's busy giving the lesson. It's very productive. On that note, Fahesh, are you ready?
Yeah, I am.
Great.
Okay. Right, guys, the very first part of the question wants us to calculate the profit or loss on disposal of the computer, and they're asking us to refer to information 2J. Now, before we actually look at information 2J, if I'm calculating
Good afternoon, Matrix. Welcome to Mindset Learn, the home of the brain. You tune in this hour with myself, Dabucho Precious, and Mahesh, and our favorite accounting buffin, Monedi. How are you guys doing?
I'm well, Tobeko. How are you today?
I'm well, thanks. Now, as you all should know, tomorrow is Women's Month. And I've been asking this question the whole day. And to our mindsetters, please keep posting. Who is your favorite woman and why?
Okay, is that for me?
Yes.
Okay. I think I'm going to have to say my mum.
Okay.
And my grandmom as well. But if I had to choose someone outside the family, then I would go with Mother Teresa.
Mother Teresa. Oh, wow. She was quite inspirational.
Yeah, she was.
And Monedi, who's your favorite woman?
I'd have to say my mom.
Your mom.
Yeah.
Your mama's boy.
Yeah, I am. Just because she inspires me to be better.
Ah, that's great. That's
lovely.
awesome. Now, guys, I'd really love to read what you have to say. I know a lot of people.
Complete the income statement for the year ended 30th September 2009. Okay, guys, so a bit of asset disposal and obviously the income statement. Now, remember, guys, the moment you get an income statement, there's a very, very important GAAP principle that comes into play. Monedi, I don't want to put you in the spotlight, but I know you're going to get this correct. Which GAAP principle am I talking about?
Matching.
Good. It's a matching principle. In other words, when I'm doing an income statement, the financial year that I'm working for ends on the 30th of September 2009, which means it started on the 1st of October 2008, and the matching principle simply tells me that all income and all expenses for this time frame needs to be shown in that income statement. Okay, right, let's now go to the information and let's get started. Very quickly, guys, the information that they've given us the pre-adjustment trial balance, which I'm not going to go through in detail. So there's that pre-adjustment trial balance, and then obviously in the
people say it's their moms, and I really understand. My mom is my favorite woman as well. Please don't forget to post all your questions, your queries, and your comments about today's show on facebook.com/learnextra or mindsetlearn/live. With that said, you may continue with the show.
Okay. Right, Mindsetters, today we're going to be focusing on financial statements, and I've picked a question where we've got a bit of asset disposal as well. So without wasting any time, let's go straight to the question. Remember, guys, we're obviously doing a lot of revision at this point, and if there are any questions on any of the adjustments or calculations, please let us know. So let's get started. Right, financial statements, a question where we're going to be completing the income statement, and there will be a bit of asset disposal. Right, let's go straight to the question itself. Okay, just want to let you guys know that this was taken from November 2009, the year-end exam. Okay, right, our question, you are provided with the pre-adjustment trial balance of Simpiwe Limited. The company buys and sells uniforms, and they also repair uniforms. By repair, guys, obviously we're talking about altering uniforms for their customers, for which they charge a fee. Okay, so immediately we're obviously looking at a trading business that also provides a service. So in other words, their main source of income will obviously be sales. But apart from sales, because they render a service, we obviously also have fee income. Okay, these fees are credited to the fee income account in the general ledger. Right, guys, for this question, we are required to, firstly, 1.1, refer to information 2J below, calculate the profit or loss on disposal of the computer, show workings. You may prepare an asset disposal account to identify the figure for 8 marks. So there's our asset disposal. And thereafter, they want us to also, let's go to the second part of the question. We're going to